Every time a cryptocurrency blows up, you're like, oh, should have bought that, right? If you don't own your keys, then you don't own your Bitcoin. It's a wild west out there. This is one of the strategies I had mentioned in my previous videos, and this is something I've learned from my own mistakes. Why would you want to lose money you don't even own? Cryptocurrency is the hottest new trend in the investing world. Price of Bitcoin has grown over 5 times in the last 1 year and Ethereum over 16 times. So don't be surprised if Ethereum takes over Bitcoin as the top crypto asset. Fun fact. Did you know the creator of Ethereum was just 21 years old when Ethereum was first launched in 2015? He's the world's youngest crypto billionaire. Around 100 million people are now using cryptocurrencies. Post my last cryptocurrency video, you guys had a lot of questions about what should we keep in mind, what are my strategies when it comes to investing in cryptocurrency. I'm sure you're asking yourself, is it too late to start investing in this newly emergent investment space? What's the best way to get gorgeous returns on my investment? If you're watching this, you've probably survived the recent cryptocurrency crash, or you panicked and sold, or you want to learn more about cryptocurrency. Either ways, I'm glad you're here. And this is not the first time a crash has happened, and it will keep happening. Today, I'm taking you through my strategies of investing in cryptocurrency. These investment strategies are also going to help you in stock market as well. Do you know the perfect way to pick a cryptocurrency? It is to go back in the future. Every time a cryptocurrency blows up, we're like, oh, should have bought that, right? Of course, nobody knows the future. If we did, we'd all be millionaires. According to the experts, the cryptocurrency prices are expected to keep going up because it's becoming an integral part of the financial world. People tend to invest more in Bitcoin. Bitcoin is often synonymous with cryptocurrencies. A lot of youngsters, even teenagers, are investing in cryptocurrencies. One of the reasons being, you don't need a huge amount to invest in cryptocurrency. You can start with as low as $1 and it's extremely easy. People who don't believe in the future of cryptocurrencies have the same beliefs that people who saw no future of internet in the 90s. And look where we are today. We cannot do without the internet now. Internet was a hard to explain concept to the people, and so is cryptocurrency. But it's hard to dismiss it entirely. Over the years, cryptocurrencies have outperformed any asset literally. In terms of price fluctuations, a few weeks in the crypto market is like a year on the Wall Street. The market psychology doesn't change. Human behavior remains the same no matter what happens in the world. If you want to be one of the biggest gainers, you have to be one of the first movers. Because when the masses get involved, it sort of gets a little late because the prices are extremely high. So bigger the risk, bigger the gain. Having said that, you have to expect the unexpected in this highly volatile market. What is your risk tolerance? Can you afford or psychologically handle the pressure and the risk? So the first strategy is buy low, sell high. Such a simple rule, right? Buy low, sell high. That's how you make money. You buy when the price is low and you sell when the price is high. But you would be surprised to know that a lot of people buy high and sell low. Yes, people often buy the all-time high prices because they feel FOMO. They fear they'll miss out. FOMO comes into play when an impression is created that everyone's selling. So you feel like selling too, otherwise you'd miss the opportunity. And FOMO also comes into play when the price of a coin you've not invested in goes up and you feel you'll miss out on the bull rally. You want to catch the train before it leaves the station. I have personally seen people doing this in 2017. So you buy at all-time high, and just when the price drops, you see your portfolio going 30-40% down and you panic sell. You take a huge loss and that's how you lose money. This happens because you don't understand the market cycle, the sheer volatility of cryptocurrency. That's how markets continue to take money from the impatient people and the money goes to the patient people who hold. This whale sold at the top and bought at the bottom. Now this is smart money. Also increased his or her Bitcoin holdings. This is exactly what people should be doing. When the prices are going high, you have to let it cool off before you jump in. But guess what people usually do? They buy high and sell low. So panic will only make you lose money. That way you give away your money for free to big institutions and these whales because they understand the market sentiment. They know you'll panic sell. They try to manipulate the market. They know the impatient people are going to sell. So these whales can buy back at a lower price. They buy the dips and accumulate while you sell all your holdings and lose money. And again, buy back at a higher price because you don't want to miss the opportunity. And the cycle continues like this. Don't fall for this. Try to avoid the FOMO and stick to your plan. Always keep this golden rule in mind while you're investing in cryptocurrency. Having a plan when it comes to investing in cryptocurrency is so important. The market changes should not badly impact your plan. Are you investing for short term or long term? There are always different moments in the market, so you must have a plan in place. You will be shaken out if your plan is to get rich quick, if you're a short-term holder, because you will panic sell when the prices go low. But the people who understand this, who have a long-term vision, hold on to their investments. You've got to be patient. If you don't believe in the future of cryptocurrency, don't invest. It's as simple as that. Because you are not going to be able to fall asleep at night if you are glued to your phone obsessing over the rise and fall of the crypto prices every second. Crypto markets are open 24/7, unlike stock markets, which is a blessing and a curse. The day-to-day changes in prices do not matter. You have to zoom out and look at the bigger picture. As I said, if you're investing for the long term, if you have a plan in place, you don't need to lose your sleep over the day-to-day changes in prices. So have your exit strategy planned in advance. The bull cycle is not gonna last forever. Let's be realistic here. Whether you invested years ago in time for the boom, or whether you're just starting to invest in cryptocurrencies, knowing how and when to exit the market is essential. Having planned your exit strategy in advance is going to maximize your gains and minimize your losses. Are you going to sell all your coins during the bull phase, or hold all of them, or hold 20 to 30% through this cycle and into the next? Or do you want to hold your position for the next 2 to 5 years regardless of what happens in the market? You have to be mentally and emotionally prepared for any kind of scenario, so you don't make decisions that make you lose money. Have a steel conviction, as I said in this video. If you don't have a steel conviction to weather the storm, you might as well not invest in cryptocurrency. The next one is invest in quality coins. The shit coins can make you money in the short term, but investing in shit coins for the long period is not such a good idea. The crypto world is extremely complex. If you really want to get involved, especially for the long term, you have to understand the concepts. Do your own research. Do not blindly trust what the crypto gurus say online, especially the so-called Doge father, because most people are biased towards the cryptocurrencies they own. I would say nice things about the cryptocurrencies I own, obviously. So do your own research. I cannot stress this enough. It's your money. After all, if you invest your money, you are going to end up with a profit or loss. And ultimately, you are responsible for it, nobody else. And when the cryptocurrency market gets regulated, a lot of these shitcoins are going to go out. So be 200% sure of what you're investing in. I also see a lot of people buying a coin because it's cheaper than Bitcoin. Now, they're only looking at the unit price of the cryptocurrency, not their market cap. The reason these coins are cheap is that these are large in number than Bitcoin. Let's take an example. People think Doge can beat Bitcoin in the next few years, but it's not really possible, because first, there are unlimited Doge coins. In fact, there are 129 billion in existence right now, and the number is only going to get higher, but there are only 21 million Bitcoins. So you have to look at the supply of coins and the unit price. Even if Doge takes 4 years to reach 1 trillion market cap, it's still not going to go higher than $10. Bitcoin's price is higher because it's the OG cryptocurrency and because it's limited in number. It's the classic case of demand and supply. So if you want to predict the price, look at the market cap. The people you listen to are not going to give you their money or recover your money for you. So invest wisely. You can follow the founders of some coins on Twitter, watch their interviews, see what they're doing, and combine this with third-party reputable sources. Ask yourself these questions before you invest in cryptocurrency. What makes it a good investment? Who is the team behind it? Do they have a strong leadership team? What is their vision with it? What is the roadmap? What is the real world problem they are solving? How could it be a good or a bad investment? Does a particular or a few wallets hold the most percentage of the coin? Because then they can easily manipulate the market price, which is centralization. There was a rumor that the recent crash was highly coordinated by the people with huge holdings, and they manipulated the prices. And the next one is diversify. I'm sure you've heard it so many times. Don't put all your eggs in one basket. Diversify as much as you can. Make sure you don't put all your money in one cryptocurrency and diversify your portfolio. Diversifying helps you spread your portfolio across different markets, which reduces the overall risk. If one project fails, there are others to support your portfolio. You can mix your portfolio across high market cap coins and low market cap coins to average out the overall risk. You can check out coinmarketcap.com for real-time cryptocurrency prices and their market cap. You need to be aware of the people that are maximalists. They think only the cryptocurrencies they own will survive, and they try to spread hate and misinformation about the coins they don't own. So you need to keep an open mind, because there are some really good projects and some really shitty ones. So you've got to do your own research. Cryptocurrencies are solving different kind of problems. Yes, all of them are not going to survive, but some wonderful projects are going to survive. So make sure you learn as much as you can, and that will keep you one step ahead and confident as an investor. Almost every single coin has easily accessible white papers online. All you need to do is use good old Google. White papers provide facts, diagrams, statistics, etc. If you want to know if a cryptocurrency is legit and professional, go through their white papers. For example, you can go through Ethereum white paper on this website. It's quite long, take your time. Similarly, you can access white papers of other cryptocurrencies as well. Now, some developers issue the light paper. Just like the white paper, light paper explains the purpose and technology of the coin, but they're not as technical as the white paper. Next one is dollar cost averaging or rupee cost averaging. Now, in this approach, you buy a fixed amount of cryptocurrency at regular intervals, no matter what the price. It's a really good strategy if you're looking to invest for the long term. For example, you plan to buy Bitcoin for $100 every first of the month. Buying at regular intervals like this over a period of time helps reducing the impact of market volatility. When prices rise and fall sharply, and means on average you are likely to get more Bitcoin for your money than if you had spent all your money at once. One of the smartest things you can do to minimize the risk on your investments is taking your profits similar to your initial investment. This way you can avoid the risk of losing all your money. So if you've invested $1,000 and you've made $1,000 on it, you take out $1,000 profit and keep the rest of the $1,000 invested. This way you'll never lose the initial money you had invested. This is what I do. I remove the initial investment and let the rest invested and grow over time. If you think it's getting too crazy for you and you want out, you've had nice gains, you are satisfied, and you can exit with your money and your gains and see how everything plays out, and if you want in again when the market pulls back. Don't make decisions based on your emotions. The average Joe out there making only a small percentage on stocks or other investments, they jump in and buy some of the action because they keep hearing Bitcoin went up 400%, 500%. This emotion is an evil thing to rely on. You have to stop and think, maybe I should learn about cryptocurrency. Maybe look at the trends, look at the charts. One of the most common fears in the financial markets is FUD. Fear, uncertainty, doubt. I'm sure you must have heard this term. If you allow these emotions to influence you when you're investing, then you're certainly going on the wrong path. I know it's natural for us mortal humans to have these emotions, but try to keep your emotions in check when you're investing in cryptocurrency. Research, analyze, and make informed decisions. Otherwise, these emotions are going to hurt you as an investor. A lot of dumb money has been pouring into cryptocurrency as it's gaining more traction. People who have no knowledge, people who normally would not invest in stock markets, are trying to get rich with cryptocurrency. People who think it's easy money, but they have no idea about the basic rules and strategies you should follow when you invest in stock market or cryptocurrency. Then they buy at the top and panic sell when the price goes low. Too many people are seeing this as some sort of lottery and don't want to miss out. They just look at the price. They don't look at the market cap or intrinsic value. That's what leads to the downfall. Only invest what you can afford to lose. I know I say this a lot, and there's a good reason for that. It's a classic golden rule of investing. I'm sure the recent huge dip made people realize why you should not put all your life savings into cryptocurrency. In fact, you should not put your life savings in any sort of investment. If you're putting in your life savings, then you're just gambling. Some people even take out loans to invest in cryptocurrency. Such a bad way to invest, in my opinion. Why would you want to lose money you don't even own? In addition to not being able to sleep at night, you will put yourself in a lifetime of debt if something goes wrong. I know people are putting in millions of dollars, but that's because they can afford it. That's probably just 10% of their net worth. If they lose that money, it's not going to matter to them. And stay away from leverage if you're a newbie. I know cryptocurrency exchanges promote it a lot, but please don't. I know when the market is booming, you're tempted to invest a lot more, but make sure you stay disciplined and stick to your budget. Don't sell all the coins at once. This is one of the strategies I had mentioned in my previous videos, and this is something I've learned from my own mistakes. Don't sell all your coins at once when the prices go up, because the prices can go even higher and you'll miss out if you don't have more coins. Don't buy all at once. Similar to not selling all my cryptocurrency at once, I also do not prefer to buy all the coins at once, because the price can go down the minute you buy. And if you don't have more funds to invest, you lose out. Buying in small amounts is going to give you a chance to buy more when the price goes even lower. Protect yourself. I cannot stress this enough. It's one of the most important things you need to keep in mind when you're investing in cryptocurrency. You've got to beware of the scammers. It's a wild west out there. Cryptocurrency is not regulated as of now, so you need to be extremely careful. And the new investors coming in right now are at the highest risk of losing money. Think logically, double check, triple check everything. Only invest on legit exchanges, have strong passwords, two-factor authentication, and if anybody tries to give you free bitcoins, run. Nobody's going to give you free bitcoins. Don't click on strange links. For now, you're on your own, so you have to protect yourself. Also, a lot of people mistake exchanges for wallets. I read this interesting point somewhere. If you don't own your keys, then you don't own your Bitcoin. When you keep your cryptocurrency on these exchanges, you don't own the keys. Even the cryptocurrency exchanges can get hacked or go down. So to keep your cryptocurrency safe, you need to look at the safer options. If you're investing in cryptocurrency in huge amounts and for a long period of time, you need to store your cryptocurrency in a wallet. Now there are hot wallets and cold wallets. Hot wallets are digital cryptocurrency wallets. They are online and they are easier to access, while the cold wallets are physical devices. Cold wallets are considered safer and superior because they are offline, while the hot wallets are connected to the internet. So the hot wallets can be hacked. If you store a cold wallet properly, it cannot be hacked. And while we are talking about protecting ourselves, don't listen to the big billionaires. You know, the so-called Doge father. Cryptocurrency is supposed to be decentralized. And when one person tries to shake the market so much, it defeats the purpose for which the cryptocurrency was created in the first place. Why are we listening to them and letting them make our decisions for us? I'm not married to any particular asset or token, not even Bitcoin. You never know, any of the altcoins can overtake Bitcoin anytime. We've seen Ethereum trying to do that. Well, I am not a financial advisor, and this is what I keep in mind when I invest in cryptocurrency. I hope this video helped you. This is not investment advice. Everybody's situation is unique. You have to factor in your own personal risk tolerance, your conviction with Bitcoin, portfolio construction, and time period when making investment decisions. Let me know what you keep in mind. What's your strategy when it comes to investing in cryptocurrency? Give this video a big thumbs up if it's helped you. Subscribe and hit the bell icon to be notified every single time I post a new video. See you in my next video.